Welcome back to Candlestick Signals for today's market. August 13th, 2025. Buckle up, traders, because we've got a roller coaster of candlestick signals to unpack. From bullish engulfing patterns in tech giants to ominous shooting stars in retail, today's market is a technical analyst's dream. Stick around as we dive deep into the patterns that could make or break your portfolio. Wall Street surged today with both the S&P 500 and Nasdaq reaching record highs. The latest consumer price index data came in slightly below expectations, igniting optimism that the Federal Reserve may cut rates next month. Let's start with the technology sector, which led the charge today with an impressive gain of 3.2% and a market capitalization change of $42 billion. Software and IT services sub-industries were the main contributors to the sector's growth, with increases of around 3.5% each. Meanwhile, hardware and storage had a daily return of approximately 2.8%. Today, the technology sector formed a bullish continuation candlestick, which is a positive pattern suggesting that the current uptrend is likely to continue. This pattern indicates that buyers are still in control and are pushing prices higher. In fact, the technology sector has shown strong momentum for quite some time, and it's possible that this positive trend will continue in the near future, with the potential for new highs. Apple, AAPL, and other tech giants exhibited a double-top Adam and Eve pattern, revealing both profit-taking and dip-buying activity. This formation occurred during the midday trading session, with the first peak at 11:15 a.m. and the second at 2:30 p.m. Traders should watch for a potential breakdown below the neckline, which could signal a short-term reversal. Moving on to the basic materials sector, we observed moderate growth, with selected materials stock leaders like Newmont and Agnico Eagle mines posting strong gains. The overall sector market cap moved positively within the day, reflecting ongoing demand in core commodities and industrial resources. The basic materials sector saw a 2.1% increase, translating to a market capitalization change of $18 billion. A bullish engulfing pattern formed at 1:45 p.m., indicating a potential reversal of the previous downtrend. In the financial sector, several banks and fintechs showcased Doji and Marubozu patterns as markets awaited cues from central bank policy deliberations. These indecision candles formed primarily during the morning session, between 10:30 a.m. and 11:45 a.m., suggesting that traders are hesitant to make big moves ahead of potential policy shifts. The industrial and utilities sectors displayed interesting candlestick formations today. Double top and head and shoulders patterns were dominant in sector leaders, highlighting distribution at highs in response to rising yields. These bearish reversal patterns began forming in the early afternoon, with the head and shoulders top completing its right shoulder around 2:15 p.m. In the pharmaceutical and biotech space, we saw strong bullish hammer and morning star signals. These bullish reversal patterns emerged during the last hour of trading, between 3 p.m. and 4 p.m., indicating renewed buying interest in these sectors. Traders should keep an eye on these formations for potential upside momentum in the coming days. Today's market activity featured notable single, double, and triple candle formations across indices and leading sectors. Key bullish patterns included hammers, morning stars, bullish engulfing, and 3 white soldiers, indicating renewed buying pressures and potential trend reversals. On the bearish side, we observed shooting stars, hanging man, bearish engulfing, and 3 black crows patterns, signaling exhaustion of uptrends and the onset of potential pullbacks. The major indices formed several bullish reversal patterns, especially after intraday consolidations, reflecting trader appetite for risk ahead of anticipated macro policy shifts. Momentum indicators showed easing from overbought levels, suggesting further upside potential is tempered by volatility risk, typical for August trading. Reversal and continuation patterns at key levels offered clear short-term trading opportunities. For instance, morning star formations were observed at sectoral lows in the consumer staples sector around 11:30 a.m., while engulfing patterns appeared at highs in the energy sector at 2:45 p.m. In the consumer discretionary sector, particularly in select retail stocks, shooting star patterns formed near the day's highs around 1:30 p.m., suggesting potential short-term tops and overbought conditions. Traders should exercise caution and consider taking profits or implementing tighter stop losses in these areas. Analyzing the market by capitalization, we noticed distinct patterns across different segments. In the large cap space, there was a predominance of double top and bullish engulfing formations, especially in technology and diversified financials. Mid-cap stocks showed more Morningstar and head and shoulders patterns, particularly in industrials, suggesting ongoing sectoral shifts. Small-cap stocks displayed an increased frequency of inside bars and Marubozu candles, reflecting indecision and potential breakouts in these more volatile segments. Investor sentiment remains broadly positive as record highs attract inflows. But caution prevails given elevated valuations and imminent policy decisions. The outlook suggests continued volatility through late August and September. Monitoring for breakdowns of support or fresh breakouts from reversal patterns will be critical in the coming weeks. For traders and investors, the advice is to accumulate on sharp dips and high conviction sectors, but rebalance portfolios to manage risk in anticipation of seasonal volatility shocks. It's essential to stay adaptive and monitor key formations to capitalize on breakout or reversal moves, optimizing exposure into Q4's typically stronger equity window. To summarize the key candlestick signals we've observed today, the bullish engulfing pattern in the S&P 500, technology and pharmaceutical sectors signals a potential reversal, indicating that buying momentum is returning. The Morningstar pattern in pharmaceuticals and utilities suggests a bullish reversal, with trends potentially bottoming out and offering upside potential. The double top Adam and Eve formation in technology, particularly in Apple and semiconductor stocks, as well as in industrials. It's a bearish reversal pattern that signals caution and potential distribution. The shooting star pattern in consumer discretionary and select retail stocks indicates a short-term top and overbought conditions. Doji candles in financials and energy sectors represent indecision or continuation, suggesting traders should wait for confirmation before making moves. The hammer pattern in biotech and materials sectors is a bullish reversal signal, showing renewed buying interest. The head and shoulders top formation in industrials and utilities is a bearish reversal pattern, indicating rising supply pressure. Lastly, inside bar patterns in index ETFs and large sectors suggest continuation, and traders should await breakouts for clear directional signals. In conclusion, the August 13, 2025 market landscape is characterized by bullish momentum driven by favorable macro signals. Yet, technicals caution for increased volatility ahead. Major candlestick signals across large-cap tech, industrials, and financials should guide short-term trading strategies. While strict risk management is recommended during this historically turbulent season, as we move forward, it's crucial to stay vigilant and adaptable. The candlestick patterns we've observed today provide valuable insights into market sentiment and potential future movements. However, remember that no single indicator should be relied upon in isolation. Always consider the broader market context, fundamental factors, and your own risk tolerance when making trading decisions. Keep a close eye on key support and resistance levels, and be prepared for potential breakouts or breakdowns as we navigate through this volatile period. With careful analysis and prudent risk management, the current market environment offers numerous opportunities for skilled traders to capitalize on these technical signals. That's all for today's candlestick analysis. Remember to stay informed, manage your risk, and happy trading. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.